Okay, folks, welcome to Market Rapid. It's Monday the 18th. Let's talk earnings. We had Netflix come out after hours. They disappointed on subscriber growth. Their margins came under pressure. Amazon this morning became far more of a competitive force, undercutting them on price. And unfortunately, Netflix needs to spend more money this coming year to buy more content. So, not a good report for Netflix. They're very expensive and they are tanking after hours. IBM, they announced after the bell. Initially, they were up, but after a deep dive into the numbers, it was revealed that there wasn't all that much to write home about. It was a decent quarter. They had a one-time cash item that hit their balance sheet, non-recurring. You won't see it next quarter. And what they failed to do, and this is what the street was looking for, they failed to raise forward-looking guidance. That's a problem. So when you have a company that beats by 10% and doesn't raise forward-looking guidance, that's a tell. It means that don't expect much more. Now, what does that mean for the market? Does that mean that we wake up tomorrow morning, the Dow futures are crashing? I doubt it. But I do think that we'll see more volatility. Now, taking a look at the chart of the S&P 500, bullish key reversal. It implies that we want to move higher, but I'm telling you right now, folks, all the charts are the same. They have a common theme, and that common theme is this. There was no volume today. One of the lightest trading days of the year. So what this tells me is that you have a lot of shorts getting squeezed and not a whole bunch of institutions thinking that we're going a lot higher. Could we retest the all-time highs? I believe so. Could we break out up and through? Sure. It all depends upon how much people want to pay up for the multiple on the S&P 500, which is now higher than 2008. Very, very expensive market. So if they want to chase yield, which seems silly because if you have a market that's yielding 3.5% and it corrects 5%, well, that just wiped out all of your yield. So it just doesn't make sense from a risk-to-reward perspective. But hedge fund managers are desperate. They got destroyed last quarter. They need to try to make it up this quarter. Dow Industrials, bullish key reversal, very light volume. Recurring theme. It appears as though we want to move higher. But as we move higher, keep an eye on how close we get to this upper band of the Bollingers. This is not a 2 standard. This is a 3 standard deviation Bollinger Band. This market is becoming very overbought. The transports. Weekly chart at resistance at 8,000. Did we close above it? Yes, we did. Slightly. 8,002.65. IWM. Held support, rally today, closed above its 2 standard deviation Bollinger Band. I added to shorts on the IWM today using the TZA. I didn't go into the day planning on doing it, so let's talk about that. I received an email from a brand new member. His name is Wilson, and he asked me, he's looking through the positions. He says, why are you still long of the TZA? Are you planning on adding more? And at that point in time, my answer was no. And then as I began to take a look at the charts of the Russell, something struck me. But before I leave the daily chart and go to what struck me, take a look at volume. Today was the lightest up volume day of 2016. So we are breaking out to new yearly highs on ever declining up volume. That is a recipe for disaster. So why did I add to our TZA position? And I added fairly aggressively today too. So you'll see that on our holdings page. So here it is, IWM 2-hour chart. You know how I love the 2-hour chart. Where are we trading? We are trading up and right at the upper band of resistance. Can we pierce it? Sure. Here's our early warning indicator. If we break down below it, as we did back here in late March, we'll look to add to our short position because I think that we could pull back and retrace down to, let's call it 110. And it's at that point in time where I might have to say, you know what? Pull back on light volume. The market's probably going to proceed higher. We'll have to close out that TZA position. So by no stretch of the imagination am I saying that I added to the TZA position betting that the IWM is going to see a 20% decline. Would I be shocked if I saw it happen tomorrow? No, I wouldn't be. Also, take note of the monthly chart. We are right at the upper band of resistance on both the 2-hour and the monthly chart. So that is the rationale for adding to the TZA trade. It's probably going to be a short-term trade. Here's the 30-minute chart, and I'm picking off a couple of divergences here. Let's update the chart. All right, so here you have it. The RSI, we are making new highs, yet RSI is putting in a lower high, not confirming this price move higher. Ultimate Oscillator, making lower highs. Stochk RSI, making lower highs. MACD, lower highs. And these may be signs, early warning indicators that the rally that we're seeing may be losing some steam. So just keep an eye on the IWM, and it doesn't hurt to have poor earnings in our corner for tomorrow morning. But we may just sell a rally in the TZA, so just be ready for that. Okay, let's talk energy and oil. This morning we woke up, futures were bright red. They were bright red last night. I was watching the Forex market. Currencies were experiencing a ton of volatility. And what happened today? You saw a bullish key reversal, a bullish engulfing on energy. That's a tell. I warned about this. If we saw a reversal day, that's a sign that the market is pricing in this bad news over the weekend. Take a look at oil. While it still closed down on the day, it was down over 3%. It closed down less than 1%. So it recaptured a lot of its losses on the day on volume that was below average. So this is the market sending us signals that the energy sector may be a buy here. And that the bad news out of Doha was really all to do about nothing. So keep an eye on the energy names. And it could be these names that if the market is propelled higher, it could be the energy sector that drives it higher. The VIX, a horrible day today. It rallied this morning, then reversed to close lower. It's got a 13 handle on it. And it looks like it may want to break. But when you take a look at the RSI, note how RSI is hooking up. And in fact, the RSI is maintaining the lows seen back on April the 6th. Let's go intraday on VIX. All right, here's an hourly chart on the VIX. Here's this morning. It gapped higher, then reversed, and then spent most of the day hugging 1325. Look at this tight consolidation. I think we could be setting up for a rally on the VIX. The banks bullish engulfing today. Volume anemic. So good price action, horrible volume. The 10-year yield down to 1.76%. The bank shook it off though. So the downtrend is still intact on yield. All right, the US dollar. We had a breakout last week, then we have a breakout point failure. We're now retesting the lows of the prior trading range. I wouldn't be a bit surprised to see a drop, but I have to be honest with you. I was looking at the gold mining names, gold. A lot of the commodity plays did not do well today on the weak US dollar. So what that leads me to believe is that there may be a rally at hand in the US dollar. Just a hunch, a gut feeling. Let's go to uranium, which we are long, pulled back today. No great shock. It was overbought, slightly overbought. I'm not willing to sell it yet. Volume rose to the downside. Nugget puts us long of the gold mining names. It was down today. We added as it rallied off the lows of the day. Unable to really follow through. Not really. It was unable to follow through on Friday's very, very bullish price action. Volume to the downside was very weak. Stokes maybe poised to hook back up again. Let's take a look at the intraday chart. 2-hour chart first. We had a breakout. We're consolidating above this upper band of resistance on NUGT. Here's what's haunting me. RSI, lower high. It's concerning me. Ultimate Oscillator is still hooking up. Stokes is still hooking up. So I don't get the warm and fuzzies with the RSI rolling over like this. The price action is good. I didn't like this morning's price action. It gapped higher. That's why I mentioned this morning, don't chase it. Something's going on. And sure enough, it pulled back, recovered on the day, but just couldn't close positive. So that's a concern to me. And as it stands right now, we have a possible lower high getting set up on NUGT. Now, let's take a look at a 1-hour chart. And this is our line in the sand for NUGT. We're in a triangle formation, a very, very tight consolidation. There was hardly any volatility at the close, which you rarely see on NUGT. So that tells me that tomorrow morning we are either breaking out or we are breaking down in a very vicious fashion. Note how in the hourly chart we have a lower high on RSI, lower high on Stokes, lower high in Ultimate Oscillator. So I'm a little bit concerned about NUGT. I have to be honest with you. So we have a profit in it once again. We'll look to, if we break down tomorrow morning, we're going to look to take that profit off the table and move to the sidelines and perhaps even get short of the gold mining names if we get a breakdown. And we'll look at Dust as our short vehicle. LABU, which is long of biotech, another good day today. Volume above average. Higher lows in Stoke RSI, higher lows in Ultimate Oscillator. Exactly what you want to see. I would like to see a breakout here on Ultimate Oscillator. We don't have that yet. And we broke out of this trading range today, yet Ultimate Oscillator did not break out along with it. Potash continues to move higher. Remember this from the other day. We broke out, pulled back, retested. Always remember that setup. The breakout, the pullback and retest, and now we have a continuation move higher. Potash, I think, is moving a lot higher. Up 34 cents on the day, 2%. We remain long. PLG, Platinum Metals Group, a horrible day today. Then it reversed. It closed down. I'd like to see a bit more consolidation, a little bit more stabilization in the commodity space because, again, I'm concerned about the price action. The dollar was down today, yet commodities just couldn't catch a bid. It concerns me. Stokes still have some backing and filling to do here. I don't think it's necessary to get aggressively long of PLG just yet, but we may begin to nibble effective tomorrow. And that's it for tonight, folks. Everybody have a great evening, and I will talk to you tomorrow. Be well.